This is our Forex blog for February 22nd, 2012. And like most days, we want to buy the strongest ones versus the weak and sell the weakest ones versus the strong, depending on which currency's on top, which one's on the bottom. The real-time strength or weakness shows up in histogram form, and underneath that we have the daily, weekly, and monthly trend. So if you see incredible strength in the dollar, for instance, coming up to today, and the weekly trend is also up, the daily trend's up in this case, you'd want to buy it. But in this case, the daily trend's up, the weekly and monthly trend's down. The yen is down on all time frames, so you're better off, selling the yen versus the strongest ones, the euro, the Swiss, for instance. So let's take a look at that. You want to buy the euro yen, you want to buy the Swiss yen. Let's take a look at the euro yen first. And you can see this went right up to my Fibonacci profit target level. I do these each night, spend 30 to 45 minutes, so therefore you don't have to. And they show up on your chart, and you know that these are not only excellent places to use as a profit target. Usually the market, once it breaks through a Fibonacci retracement level, it will go to the next resistance. There's lots of resistance right here, but once it gets above the monthly midpoint pivot right here at 106 around 09, there's nowhere left to go except up to the weekly R2 and Fibonacci area, and the half number also acts as resistance. So it had a nice 40 pips of room to run, and there's a lot of good trades today when it breaks out over the previous day's high. Nice trade right here, this pullback right here, which probably would have left in a 5 or 6 pip loss. Entry right here on the pullback, small profit, little pullback right here, loss, and then the last one went right to this level. And aggressive counter trend traders can look to sell at Fibonacci profit target levels, especially on a range chart. This went right up to that area, kind of went sideways. As soon as it goes underneath the low here at 47, you can see it pull back about 17, 18 pips. The Swiss, this is not a currency I typically keep up and run overnight, so we'll bring this up on the chart here, Swiss yen, and you can see it also is working its way up. And once the currency starts trending up, usually it goes to the fib targets, usually no more than the 1.618. That's usually, in my opinion, 70 to 80% of the time, the maximum high. And if it goes up to the first 1.382 fib target and stalls, you want to exit half and then use your trailing stop for the other half. If it goes sideways at the if it shoots through the first one and then goes sideways at the second one, you want to exit your entire trade up there. Because again, up to 80% of the trades don't go past that. Now the pound was extremely weak today. This is another one I don't typically leave running for class purposes. The euro pound you'd want to buy. And as you can see, explosive move up. You might have bought this pullback right here with a loss. You bought the second one, either left with a small profit or you kind of waited for the breakout of this little wedge pattern to happen. A lot of times after big moves, the market kind of chops around a little bit. Anytime you see a wide volatility get smaller and smaller and smaller, when it breaks out, it usually goes up again to the fib targets of this last wave. And guess where it went? Almost to the pip. I might not have drawn that on there perfectly. Maybe 2 or 3 pips above there. Excellent profit target. The only secret to trading is having smaller losses than your wins and trying to be 50% and higher accurate. Even if you're 40% winning and you have 2 times bigger wins than losses, think about that. For $200 wins, on let's say you take 10 trades, 4 winning trades times 200 per win, that's $800. You have 6 losses with $100 losses, right? That's $600 lost. You've netted $200 even though you're wrong 60% of the time. So imagine if you're 50% right or more and you also catch bigger wins and losses, you're going to do very well as a trader. That's really the only secret that you need to learn and focus on. Again, the pound was weak. The Swiss also was very strong last night. So you'd want to sell the weak pound because it's on top versus a strong Swiss. Notice, again, it just falls and falls and falls. So if you have our currency meter in our software, you pretty much know which currencies to focus on. And again, most of the time, the 1.618 is the maximum profit. If it comes down to the first one and goes sideways, I tend to exit the trailing stop. If I had left this running, probably would have got hit somewhere right here at 85. Pretty much the exit was around that 85 level. And once you see a big move like that, it's usually going to go sideways for 30 minutes to an hour. I might have sold this right here with my stop right above the swing high. It came down, really didn't go lower. I would have probably exited that and then re-entered once it broke the low here and probably exit the whole trade here at 85. But that last trade short at 20, out at 85. That's 35 pips. If you risk 10 pips, it's a 3 times bigger win than loss. And the pound Swiss is a little bit more volatile than other pairs, so you might want to trade smaller lot sizes and have a bigger stop. One way to judge how volatile the currency is to add our script called ATR, and it will show you how many pips per bar on average over the last 20 days from 3 o'clock to noon Eastern time. It's the most volatile time of the day. This 5-minute bar typically moves 4.5, 4.6 pips per bar. So it's actually not that volatile. If you put this on the pound yen, it's probably 7 or 8 pips on a 5-minute bar. Lately, this one's been lower volatility. How about the Australian yen? In the past, they've been a little bit higher. We have a little bit lower volatility now than we have in the past. So using this, you want to round up to 5 pips per bar, and you can, instead of using a 5-minute chart, what I prefer is, let's say, a 5R chart. 5 pips per bar, and R stands for range charts. It's going to go get the tick data, and every time the pound Swiss moves 5 pips, it's going to start a new bar. Now I have this on a 6-day chart here, so it's going to have to download 6 days of tick data. Let me see here. There we go. So here you can see on a range bar chart a lot clearer picture. It's actually beautiful. When you have it move down, you have these nice little pullback trades. I kind of prefer a little bit deeper pullbacks. You know, if you just use trend lines kind of to enter into the direction of the trend, you know, you have a small profit here. Sometimes they go up and they go sideways like that. When they break down, you go short. Obviously, that one wasn't that profitable. You're going to have a lot of small wins, break-evens, very tiny losses. And occasionally, when you're using our tools properly, you catch those big moves. Look, 10, 20, 30, 40, 50, 60, 70 pip move. It only takes one nice 70 pip move to get rid of 10 pip losses. And, you know, 70 pip moves are rare. Maybe you might get 1 out of 30 or 40 trades that big. But most of the time, your decent-sized moves are going to be 20 to 30 pips, and occasional 40, and you know, even less occasional 50, and so forth. The more volatile pairs like the pound Swiss, they can move, you know, more pips per day. You can look at our average true range to see how many pips each currency moves per day, and use that to trade in the more volatile ones if you're looking to catch bigger pips. If currency only moves 60 pips a day, you might only catch 20 or 30 pips of all the swings. If a currency moves 250 pips a day, it's a lot easier to catch 70 pips, obviously. That's just common sense. So anyway, that's it, our Forex blog video for today.